The private sector, many believe, is a critical catalyst for economic growth and development in Sierra Leone, driving job creation, investment, and poverty reduction. However, its potential is hindered by significant challenges, while ample opportunities for revitalized growth exist through strategic reforms and investment in key sectors. This morning, we're going to discuss the role of the private sector as catalyst for economic growth and development, challenges and prospects. In the studio to discuss these issues, we have Professor Ezekiel Calvin Duramani Lako, a senior professional accountant and a financial economist who doubles as the Deputy Vice Chancellor of IPAM, and Alfred Akibobet, a prominent Sierra Leonean accountant, a tax expert, and an entrepreneur. He's also the CEO of the Betts Farm. Good morning, gentlemen.
Good morning.
I see you were smiling while I was
The introduction threw me off.
I know. It's always a pleasure to have you here, Professor Lako. How are you?
I'm fine. You didn't introduce me as part of a while.
Oh, okay. He's also our MD here at
Emeritus.
At AYV. Professor, good morning once again. Like I did say, Sierra Leone's economy remains heavily state-driven. Now, from an economic theory standpoint, has government crowded over the private sector, and how?
It's a very interesting conversation that we have to have, but one thing that has come out from research, because I come from academia as well, and that is, I think most of our conversation now should be driven by evidence-based information, as well as what obtains within the normal economic situation based on the individual and layman perspective. But from evidence-based, we see that, yes, government is seriously crowding out the private sector. There is a cliche that if government and the ability of household to spend in Sierra Leone largely depends on the ability of government budgets, or say, how would I put it, the structure of government budgets. So when private sector or when public expenditure declines, then private sector consumption also declines. We've seen those trajectories. So say the least, before we go to detail, it is seriously evidence that the private sector in Sierra Leone is largely driven by government expenditure on one hand and government policies and decisions on the other hand. And then we have seen in other instances where, regardless of the size of government expenditure, private sector will be able to handle the economy. I'll give you an instance. For example, in America, there has been a fiscal cliff where the government was shut down for a couple of months, but that does not affect growth of the private sector, because the private sector is so large and can take care of lots of things. So even when government laid out more than 100,000 workers, the private sector was able to absorb, and there was private sector growth in terms of employment, and then there was even evidence of growth in terms of general microeconomic dynamics or variables. So in Sierra Leone, it's on the other hand, and that's why we have to look at what's the relationship between government in general and the private sector in particular, and how this relationship can be understood in terms of decision-making magnifications, and how we can broaden our understanding on these issues in context and then in theory as well.
Would you say Sierra Leone's current economic model is pro-private sector, or does it only claim to be?
Well, it's difficult. The intention of the economic model is to also stimulate growth. But when you look at what's coming out of the budget, the focus of the government budget, for example, you see largely that private sector has to be at the burden of the growth, because we're transitioning more towards a government-led fiscal growth, where institutions have to be so much taxed for government budgets to be realized. So, you know, the decline in international funding for Sierra Leone in particular, and Africa in general, based on all what's happening around the world or whatever the case might be, has also showed very strong evidence that funds has to be generated directly, and then private sector has to pay for that growth. And then when private sector pay for the growth, probably my brother here, who is so akin to tax, will come up with other advices as to how that will translate to private sector itself, the private sector growth, general economic growth, and how it affects the individuals. But we'll come to that later, as I said.
In your own thoughts, how would you assess the contribution of the private sector to that of the GDP over the last decades?
Well, private sector has been contributing to GDP because we have seen evidences where there has been revenue mobilization, even though not, revenue mobilization is an indicator of private sector growth, and private sector credit is also an indicator. So there has been an increased private sector and contribution to tax, for example, which is an evidence of private sector growth. There has been an increase in private sector employment, even though not in terms of ratio to the population. But private sector expansion has served as a catalyst to Sierra Leone economic growth. In fact, had it not been for some private sector intervention, situations would have been worse. However, the question also is the level of growth or private sector development or expansion efficacy. Has it been to the magnitude of the expectation of governments, of individual, or general microeconomic situation? I think that question is something that we need to have a further conversation on.
Alfred, welcome to the conversation. I mean, let's practicalize things a bit. You've been here for a while, actually, in the tax space. What would you say is the biggest problem, suffocating our, private sector?
Well,
obviously, it's struggling, really, to be honest with you.
Yeah. Well, when you actually balance things, so we look at tax both sides. Tax policy side, which is basically what the law says, from the policy to legislation. I will look at the tax administration side. On the tax policy side, you see some improvements over time, although, for example, Finance Act 2026 has its own drama in there, let's put it that way, to be very diplomatic. And the point he was making there is that you do see a little bit of balance also. So on one hand, let's say, for example, in the Finance Act 2026, you see some things there which is basically trying to protect some industries in Sierra Leone, right? Especially in the agricultural space, like taxing some imports. And meaning that the idea there is that if you tax these imports, you will allow the private sector in Sierra Leone to grow in that space. But also you have to be very careful with that, in the sense that if you actually don't see the full effects of it in terms of, let's say, whether the people that are manufacturing or doing things in Sierra Leone are able to meet the demand, then obviously we do have challenges, because in that side it means that there's less supply, and obviously people want to import, and obviously be more expensive. But we've also seen that work. So for example, when they protected industries that produced vegetable oil, we now see that we kind of like are not even bringing in vegetable oil, which is a good thing, right? So it means that if you're able to support the private sector in that means, in terms of tax policy, it means that at the end of the day, what you'll have is an improved economy, in the sense that when people produce in Sierra Leone, they're able to employ people in Sierra Leone, they're able to pay taxes in Sierra Leone, so we're not even using our money to go buy goods outside. And meaning that if we go buy goods outside of the country, it has a lot of effects. It had a lot of strain on the foreign exchange. It means that the money we're earning here, we're actually paying salaries and taxes in other countries, etc. But on the other hand, also, the point he was making earlier on in the tax side is that in the Finance Act 2026, you've seen some increases. For example, rent tax being increased, tax on dividend being increased, tax on interest being increased, tax on withholding tax on non-residents being increased. And when you have that, it means that the point he was making is that it means that what they're trying to do is that because we do have less funding coming in from our development partners, we want to be able to generate revenue, right? So you'll be able to tackle things in that side. On the other hand, when you do that, there will be some effect on the private sector, because when the private sector has less money, it means that they have less money. Even, for example, corporate income tax has been increased from 25 to 30%. It means that when they have less money, sorry, it means that they will have less money to be able to invest in innovation, which has an impact in terms of their growth. And that growth, if you limit that growth, it means that they will not be able to pay more taxes in the future. So that balance actually has to be there. But generally, when we look at the whole private sector growth, I do think that it's a topic we should be shouting all the time. And even the question she was asking earlier on, whether we're serious about it, I do believe that for a very long time, I don't think that anybody in government will just be shouting that they want private sector to grow, but just rethinking how we want to encourage private sector to grow, I think, is the main thing. If we look at many countries around the world, what they're trying to do is that they put private sector as the important sector. You don't want to depend on your government. You don't want to make the government be the biggest employer. You want to allow the private sector to be able to go at a level wherein they employ more people, pay more wages, pay more taxes, and that has an effect on your economy. So people, what many countries are doing is looking at their country and saying, let's have a business model, right? Simple things. Let's say we take tourism. When you go to all these other countries that have tourism, trust me, even maybe 300-400 years ago, these people actually thought about what they're trying to do in terms of their tourism. Let's say we take France, for example. Maybe it's an example way away from us, but let's say you have the Louvre, you have all these things that people go to, the Eiffel Tower and all these crazy things that people go to. They created these things, right? So we need to start creating things that will attract people to come in. We need to be more strategic. If we want to say we want to do tourism, what are we doing about our beaches? But we will not only concentrate on that, because anytime we talk about tourism, we think also about that. What are the other things we're trying to do? Recently, the Ministry of Tourism did a Reggae Fest. We need to start being innovative in bringing those kind of things. We need to be able to build new museums, for example, arts, for example. Do we have a nice theater where we could actually do things? The new Meata Center may be a starting point for some of these things. So we need to be very strategic about what we're doing. And even when we're supporting the private sector, we need to pinpoint what we want, right? So for example, if we say now we want to solve a problem wherein we don't want to bring in tomato paste into the country, which is one of the things they did in the Finance Act. We need to target that good and say, within 5 years, we don't want to bring tomato paste again. What are the things we're going to do between agriculture, meaning that the Ministry of Agriculture has to be involved? What are we going to do in the manufacturing side? It means the Ministry of Trade has to be involved, which they are trying, to be honest with you. I know situations wherein they're trying to help people that are bringing in manufacturing and business in the country. So that coordination is what is very important. And it means that the private sector also, on the other hand, because all the time we put the responsibility on government, but it also means that the private sector also has to be innovative in what they're thinking of trying to do. They have to be able to have a proper business model, a proper value proposition, and trying to be able to change the game in terms of what we're trying to do.
You know, let's zoom in a bit on SMEs, you know, small and medium enterprises. I think these are crucial drivers of the economy. Let's forget about big, you know, corporations for now. A lot of the people who do business these days complain, actually, honestly, that it's much more expensive to practically clear a container from Water Key. I don't know why. It doesn't sit well with me, actually. It's something that's been bothering me for a long while. Is it that when you increase taxes, you make more money as a country, or reduce them and have more players on board so that you can make more money? How does it work, actually? I'm not in the financial field.
So when you look at when they bring goods into the countries, there are different things you look at. And we do have import duty rates.
Yes.
And these rates basically are fixed most of the time. Obviously, they change them once in a while when they have a Finance Act. And you do have other taxes, right? And the other taxes include, let's say, a GST, ECOWAS tax, etc. The challenge we have, maybe a little bit better for the past 2-3 years, is that when we had a devaluing Leone, it means that the Leone terms of clearing increased when the Leone was devaluing. And obviously, we saw that 2021, 2022. It's better between 2023 to 2025 now. And if we don't look at the rates now individually, so on the one hand, what government is looking at is saying that if I reduce rates for some certain goods, I lose the revenue. But on the other hand, and that's the reason why I was talking about, there's always a link between tax policy and tax administration. So on the one hand, if you're reducing the rate on something because you don't want it to be expensive in importing, because at the end of the day, we should really, I guess, now in the world, this is the first time everybody's paid. I think Sierra Leone, we paid attention a lot to tariffs. You know, when America started talking about tariffs. So because we're highly dependent on imports, we should try as best as possible to start producing in the country. And when we produce in the country, it's highly likely that if other factors, because we're not only looking at the rates here, we're looking at electricity. If electricity is expensive, which is a challenge for the private sector, it means that manufacturing will be expensive. So how are you going to substitute that? So when we answer, in going back to your question in terms of imports, etc., they look at the value of the goods. And the value of goods, obviously, you buy everything in foreign exchange. Yeah. So if it increases in foreign exchange, and we know that supply chains is a challenge now all across the world, it means that even bringing things to the country, the freight cost increases. And the freight cost is also embedded. So it's the value of the cost of the good, the insurance, and the freight. So if they are up and you still keep the import duty at a level which it was, then it's obvious that things will be expensive bringing it in. And the other thing also that businesses actually are frustrated some of the time is even bringing the goods out of the ports is a challenge. And bringing the goods out of the ports, you have different players involved. You have the NRA involved, you have the Ports Authority involved, you have the shipping companies involved, the destination companies involved. So all those processes, how you're able to link or coordinate better between all these players will obviously help for goods to come out of the ports as early as possible, and obviously reduce the cost of doing business.
Professor, let me bring you in for a while. I mean, in all the countries around the world, industrialization is big, actually. I mean, we're still struggling with, I understand that it's a growing country. You know, we are just healing off from a very brutal, and devastating war in Sierra Leone. That's not an excuse, though, because we're now talking about, is it the third or fourth industrial revolution now? People are building things. We're talking about blockchain technology, AI, and all of these things. And factories are very crucial in other economies. What's impeding the growth of factories and industrialization here? Aside electricity, of course, which we all know is a very, very big problem. What other factors do you think is the problem?
Oh yeah, thank you. So I listen keenly to the conversation, and sometimes we have to understand how transmission mechanisms work within economic development context themselves. I will want to, when my brother was talking, I also was thinking about tax incidents. Let me just clear something on tax incidents. There are times when there are three important players in the economy. There are the individuals, the governments, and the firms, and all of them have their interest. The individual interest is to buy goods at a cheaper rate and to be able to improve standard of living. And at the same time, the individual wants government to give them money in terms of salary. And government, on the other hand, want to, their focus is their fiscal regimes. We're talking about taxation. I remember when there was a time when NRA was introducing the GST, and then they were very concerned and happy about the administration of the GST. While we academics and professionals, on the other hand, we're looking at the incidence of the GST. So what's the economic incident? So for example, if I increase tax, I as government, my thought will be I'll improve government's revenue base. And then I will have enough money to subsidize for the lack of international funds coming in. While on the other hand, when you increase tax, if the base of taxation is small, then an increased tax will not qualify for an increased revenue. But what happens on the other hand, when you increase taxes and I have to pay the tax, the economic incidence of the tax is on the individuals and the private sector, while the statutory incidence is the firm that's paying. So basically, if AYV is paying tax, you suffer that tax indirectly, because the inability of AYV to increase your salary will also be pregnated on the increased tax that AYV is paying. So that serves as a lot of dichotomy between what governments end up getting and the ability of government to increase standard of living in the economy. But that besides, let me come to industrialization. Electricity has been the key discussion on industrialization, but international competitiveness is also a very interesting concern. While I think that we have to improve, so this was the question I wrote when I took for my brother. This is a very interesting thing. If we're taxing, or we're increasing tax on certain imports, commodities, yeah, and with the understanding that the private sector can substitute in terms of supply, is that the case? I was in a flight when somebody told me that Liberia, they're now producing iron ore, and now the cost of iron ore in Liberia is higher than when it was imported. So the domestic production cost is higher than when it was imported. So they want to import. So this is an interesting thing. And then when they are importing, when they are producing in Liberia, the quantity in terms of volume that they are producing has reduced. And then the tariff within Liberia that is contributing to government revenue has shrunk. While if they were importing, it would have been higher in terms of revenue and lesser in terms of cost that is transmitted to the final consumer. And so why? Because of economy of scale. So if what I'm wearing now is produced in Sierra Leone, and then if I bought it for 3,000, for example, and then if somebody can produce it in China, for example, for 250, at a scale where they will be able to make profit and reduce my costs, what happens is your domestic market will not be able to compete internationally. I think that's what we're struggling for. An economy of scale issues, it doesn't just depend on population size, but the propensity of the consumer to even spend. What's our ability to spend? So if I produce here, at what scale can we spend? So this is why when Akibobet said it was so right that we have to concentrate on the things that we can do better, and then bring the things that we cannot do better. And this is why we also have to use regional structures that have the ability to be able to supply. If say Sierra Leone can produce palm oil, let's concentrate on that, and let Guinea produces what, and then we buy from Guinea, Liberia. I think it's better off because you increase the regional domestic scale. But in terms of industrialization, again, capacity comes in. And there's something that has been, these are dummy variables. There are things that we've not thought of. They are implicit things. Okay. It drives cost, and you don't understand that cost driven. Let me give you an example. If you invite us this morning to come, we spend our money to come, we pay fuel and what? That's the cost of coming here. Yeah. What if we had not come at all? What's the cost of us not coming here this morning? That's implicit. You might not see it. You will just say, oh, Akibobet and Lako did not show up today. But that will cost your viewership. And then when your viewership is affected, what happens in general? If it continues like that, it costs the integrity of your production and your Wake Up Sierra Leone show. And in the long run, what happens? You lose money, you lose investment. This is implicit things that people don't see. And so that comes to capacity. Again, what's the capacity in terms of human resource capacity to be able to drive that industrialization scale? I think it's something that's lacking. And most times I've had conversation when people think it's university education or the type of education we have, which might be true. And then what about the level of readiness of individuals within the private sector to be able to handle that scale of project? I've seen people who've come, and this is something that I was thinking of again. Probably my brother might help with it because he had been into taxation. There's a high rate of enterprise mortality in Sierra Leone. Okay. When we say enterprise mortality, companies that go and register business, there was a time when they say, one of the indicators that we use to assess our economic development is the number of companies, new companies that are registered. But how many of them are functional, paying taxes, being audited, filing for audits, doing the correct thing within the economy? And then most of the company, if you're not careful, more than 70% of the company that are registered do not survive after 1 year. And why? And then if they don't survive, those capacity play a role. And then you've also found out that most of the private sector institutions, probably more than 80% of private sector institutions in Sierra Leone are owned by non-Sierra Leoneans. Yes. And then they are doing well. And then institutions that are started by Sierra Leoneans are also affected in terms of their development over time. Why? So these are questions that we have to answer as well in terms of capacity. And also, if you want to provoke the situation further, I want to discuss industrialization and to show you some of the slacks that we might not be seeing that are affecting the perpetual growth that we all thought should be going into it. Because these are just not ordinary conversations. These are something that they're so much important, but we don't see them. Do you know that of late, within the last 3, 4, 5 years, where probably it's something that was there before now, but say 10 years, most of the people that are working within the larger corporate institutions in Sierra Leone, most of these people are now bought in. They're foreigners. Even in hotels, the cooks, the managers. So what's happening? So is it that we have a problem in terms of our capacity to manage our own private sector? And when you have a private sector or a domestic industry that is driven too much by direct foreign investment, then there is no much that can be shown for domestic and growth. That is why whenever there is an international or there is a global economic situation crisis, it affects us. The rate of elasticity at which Sierra Leone responds to them is so much that it affects us probably more than the country where the crisis emanated from.
Since you are in the education sector, do you think it's a problem?
I'm also in the private sector. I'm also a businessman.
Yes, but would you say this is a problem of the type of academic grooming that these people get?
I will tell you.
What's the disparity?
I'm an accountant as well as an academic. He's an accountant. And the educational system, they produce a lot of good people as well, I will tell you. And then our programs within the education system, I told you about Bangwa the last time, are all attuned to international academic standards. And then there are people who are going, but at the same time, you have brilliant people that are coming out, but with a wrong mindset. When the mindset is affected and the level of consistency in terms of capacity productivity is constrained, you always have a problem in that economy. Take Akibobet, for example. When he came in, I joked with him because I respect him so much. I will not say what I do. I respect your input to what you do, your consistency and everything. And if everybody within the economic space behave thus, then what happens is you're able to translate that knowledge that you acquired from professional academic education to the workplace. But in Sierra Leone, there is a problem. I'll give you testimonies where lots of people thought the issue is capital formation, is access to finance. I don't think that's much of an issue. It is not. That's secondary. The primary issue here is probably human resource challenges. It's not just driven by so many people going to one field of education. Even in accounting, people qualify with international qualification, but yet the level of seriousness that is supposed to be given. Of course, research again, let me just land on this. Research plays a role. Somebody said we should develop the skill base. You cannot develop the skill base without the academic base. That's a mistake that we've made. Everything you hear about Elon Musk and what is driven by research, if we are not producing the level of research that is needed within the economy to understand issues and make decisions, then you cannot be making the correct decisions. And that's where people are coming in. They understand the economy, they start industries in Sierra Leone and survive. And yet, if you do a survey as to how our human capacity is affecting that growth, you see a lot of interesting reports on that survey. But let me just leave it here because there's so much to be said on this.
Alfred, you've heard from the Professor Lako. Now let's come to talk on the area of access to finance and cost of capital. From your own experience, why do banks perceive private businesses as high risk?
Will they? I think that's very broad. I don't want to say that. I don't think banks will look at private sector as high risks, right? When banks assess loans, they take different things into consideration. But one of the fundamental things that banks look at, which is also a challenge we've seen, especially in my space, is that people don't have proper financials, right? People don't keep proper books of records. And if you want to go to a bank, you need to be able to keep proper records. And it also looks at the governance structure also of your organization. So different programs that have actually been involved with, let's say, with development partners, or let's say even private sector players. Even now, we're running a program for the World Bank, or SME readiness in terms of that. What we actually have looked at and seen, and when you even go to what the our professor is saying in terms of research, the data we actually have there, is that most of these businesses, when they're set up, because they're chasing the money, which is totally understandable, they don't look at different things. They don't look at whether they're properly registered, whether they're filing their taxes, whether they're filing their corporate affairs returns, the annual returns to the Corporate Affairs Commission. They don't look at whether they're paying their NACIT on time. They don't keep proper records, even simple books. You don't need to maybe have a complicated, even a little, I'm not saying QuickBooks is complicated, but even keeping proper records in terms of saying, okay, well, I'm sending somebody, for example, to go deliver this for me, and I have to pay that person. You have to consider these things, because when you're able to get proper financials, you're able to see your business and you're able to analyze it and have different financial issues they actually see. So I wouldn't say that banks will generally look at business as risky, but banks have to protect their money. You want to ensure that when you give loans out, people pay the loans and you actually reduce defaults as best as possible. In terms of access to finance, I agree with him to say that access to finance is not the biggest problem, to be honest with you. I think the first thing we all shout in terms of saying, we don't have money to be able to do this. Most of the time when people want to do business, they try to go to level 5 before they even start taking the first steps. When you want to do business, you have to look at different aspects. You have to look at the markets you're going into, whether you're able to, you have the skills to be able to do that. What available markets is there? What are the resources you actually have? Most of the time, even when we talk about MSMEs that he was mentioning earlier on, an MSME will want to start and maybe go rent a shop. Do you actually need that shop? You could actually start small and go over time. Even when I look at my business, I started in my guest room, you know what I mean, with 1 staff. And over time, we've grown to 30 staff in an office. But if I didn't think that I needed that office, when I do other things, for example, outside of sale, I just need my computer, to be honest with you. There's some things you just need your computer. So you have to be able to look at those things. So I think when we look at access to finance, the critical thing there is that grow your business in such a way that you actually look at the governance things in your business, but also keep your financials. And you're able to do that, not only for the banks, but you have access to grants, capital in some circumstances. Let's say development partners, other people are able to give you money. You're able to prepare your business to such a level where people can say, let me invest in it. Because when you have data to be able to see this is what my business is worth, what will happen is that if you want to grow it to the next level, then somebody can come in and say, okay, I want to give you this X amount of money. Then you know that this X amount of money will give that person, let's say 20% shareholding, which will be able to make you grow your business. So I do think that that balance between what they're doing and what banks are doing in terms of giving them finance will be the case there.
Just speaking from what you're saying, are collateral requirements killing entrepreneurs?
Yes, I agree. So what should be done, and I believe some improvements have been made over time in terms of that, right? Some banks have actually been reducing the type of collateral they were asking for in the future. A point of discussion recently that was involved in with some development partners and also the Ministry of Finance, and one point being made there is that we really need to be able to see how we allow businesses to be able to grow without very high collateral, let's say property and things like that. And once you're able to do that, what it means is that these businesses will be able to grow.
Now, one may ask, how can private firms access long-term capital in terms of expansion?
So, accessing long-term capital actually, it depends by the type of business you're doing. I think that's the first thing. It depends by what you actually need the capital for. If you're able, so one of the limitations we actually have is that the banks also in Sierra Leone don't give loans for a long period of time, right? And if you're able to access that type of capital, you're able to access it outside of Sierra Leone, right? So you have some organizations like IFC, British International Investment, etc. They're able to give these type of businesses. But the challenge you will have for most of the businesses is that they don't have the capacity to be able to loan the amount of money these international organizations are giving to us, right? So most of them will give at least $1 million loan. And if you want a $1 million loan, your business has to be big. You're not going to go with a small business and ask for $1 million loan. You don't have the capacity, they'll obviously not give it to you. So it means that if you want to access this type of capital, you're able to grow your business to that particular level. In recent years, we've seen some businesses actually accessing these type of capital. We've seen these international organizations trying to meet businesses, but the capacity is not there to be able to do it. So if you look at the businesses that are able to do that, you don't have more than 20 to 30 businesses that are able to access this type of capital. So when we look at that level, it will be challenging for most businesses, but it means that you're able now, capacity-wise, in the banking sector in Sierra Leone or other financial institutions in Sierra Leone, for people that have small businesses to be able to access their own capital. But the challenge also there is that the interest rates are relatively high. So when you look at high interest rates, when you look at the collateral issue, then you do have the challenge of businesses being able to access capital.
In the area of local content and also that sort of competitiveness, you're a local business owner yourself.
Yes.
Would you say genuinely that local businesses are actually benefiting from local content policies?
So he did make mention of when you see a lot of farms or let's say businesses in Sierra Leone, and they do bring foreigners coming into Sierra Leone. We do have some policies that I would say you have to also be balanced. So there's a payroll tax that people pay, which is 5 million leones for 5,000 new leones, for non-ECOWAS citizens and 1,500 for ECOWAS citizens. You do have work permits, you do have residential permits that also are relatively, let's say, about 15,000 or something like that. These could be a little bit of an impediment to bring people in. But when farms look at what we have in terms of the capacity, and he did make mention of, let's say, we look at our educational sector. Educational sector, on the one hand, do produce a lot of good people. I went to school here, he went to school here, many of us did. And we do have very, very smart people. But on the other hand, we also, and maybe it's something he will comment on, we also may have to tweak our educational sector in the sense that we need to make people be able to think outside the box more in terms of the way we're educating people.
To be more direct.
More direct, you know what I mean? And I know improvements have been made. To be honest with you, I'm not au fait with all what's been done. But if you're able to make people think outside the box more, that has impact on innovation. And when you look at different things, whether it's the industrialization, manufacturing, whether it's the digital space, whether it's a blockchain space, etc., when you have people that are able not only to do a particular course, but able to think outside the box, meaning that when they're doing their courses, they're able to do more research papers that they will do and they will think, right? More case studies to be able to understand how things are being done elsewhere, etc. What that does is that once they're out of school, or even sometimes some situations you have people living in school, let's say university level, and they drop out. You see most of these success stories, especially in America, in the digital space, that's happening. It means that when they go into the private sector, they're not going to do what we have been doing for the past 20, 30, 40 years. And that is very, very critical in terms of also the private sector. Because even if you're able, let's say if you're manufacturing something, if you're manufacturing soap, if it's the same way you're manufacturing that soap, and that soap is not having some particular qualities, you're still going to sell it at a particular price. But if you're able to innovate, it means that that soap can be sold at a premium. And this is what many countries and all these countries are doing, industrialization or the other things do. Because you need people that are entrepreneurs to be able to think outside the box. So I think it's that ecosystem of the educational sector, us in the business sector, governments, etc., that will also help that space.
Professor Lako, you just heard from what Alfred mentioned. Now, how can university adhere to ensure that they become more direct enablers for private sector growth?
Okay, so before I answer that one, I am going to. There's something very important that
Mention.
he said about the issue of governance as against bank risk and access to finance. I think so. This is something that we also have to understand, that your ability to access finance is just not on just chasing the money. In fact, there's a research that if you go to Google Scholar, you see it. What's the effect of private sector investment, private sector credit on private sector investment? And what we found out is that when interest rate in banks increases, private sector credit also increases, which is contrary to basic understanding. Normally, when interest rates are high, you will not want to access bank loan, right? Because, I don't want to loan because the interest rates are high. But people take credit regardless of the interest rate. So it means people are chasing the money more than even looking at their ability to pay. But let me also come. We have a situation within the private sector where the non-performing loans in banks are very high. So that means it's a risk. But why are non-performing loans high? This comes to the issue of governance. I think governance is a very important function to capital formation than even the money itself that you access. So I've seen so many people in Sierra Leone say, I have businesses, but how many of these businesses are being audited? How many of them are filing for taxes? And if you don't have these businesses that are structured in that way, it also imperil their ability to even access international grants, because you're talking about scope. If you look at the tenure, say most banks cannot give more than $1 million or say $4 million maximum, because they're single obligor in terms of their capital that they have with the central bank will not allow them to give more than the capital that they have. So the maximum banks can give here is about $4 million. I don't know if there is a bank that can give $5 million. And when some private sector, in terms of the growth they require, need $20–30 million, which is small relatively to other countries. And then if you cannot have that in country, that means even the size of the financial system is too small to absorb the level of private sector growth and industrialization that's needed. So how can that be expanded? I think that's another important thing. This is why private sector institutions have to be serious about governance. If you have a company, then how is that company structured? How are you making decisions? I'm not giving you money when you're making the decisions, how you feel when you feel. Because that's a risk of your, or it triggers your inability to pay back. And when I cannot be paid back, it increases my non-performing loan, then it affects my portfolio and my ability to invest. But now coming to university education, and this is something that I have, for example, I cannot talk for the entire education sector, but what we are doing now is for the past years we continue to re-engineer. And then when we re-engineer, it means we want, one, to transmit academic knowledge, we want, two, to transmit skills that are needed. And then how does that help? Now, so when you're able to prepare the students on one hand to get the knowledge, but again, one thing that the private sector also should take into consideration is that when you prepare students to go out there, for example, you prepare as journalists by universities, right? And then you come in there, most of them are coming as internship. So you, the private sector, also have a role to play in terms of training them when they are in job, because the universities are not technical institutions that are training them on the job. They're providing them with the conceptual framework that is needed. So that's why we send them on internship as well. I can give you some cases where students are sent on internship in the final year as accountants, but when they go to the offices, they are not being trained as accountants. They will just put them to, okay, go buy this for me, go get this for me. They are not there for that. Train them on the books. But most times people just think, for example, accountability is an issue. People don't want to give information to people. People don't want to train them on the data. But it has to be an open space where you learn the skills and then you'll be able to give the report. That's one. So the private sector also have a role to play in terms of how we develop our students before they graduate from college. Let me tell you, for example, IPAM, what we've done. We're coming in with a curriculum that will give you 60% academic education and 40% skill-based. to prepare you. So before you graduate, you also graduate with 4 micro-credentials that you get from 4 centers. So aside of the academic faculties that we have, we're also creating centers of excellence where you go and get skill-based. But again, I had a conversation with somebody that's running a skill-based entrepreneur institution, and they said more than 3,000 people have graduated from their institutions and they've gone to the market. And then I asked, what has been the impact of these 3,000 people? Because you also can go with skill-based, but if you don't have the requisite mindset to be able to handle that skill, you still will not be able to project the growth that is required. So it's not just the education. It's the mindset, it's the level of readiness, it's the level of sincerity we have to be able to govern our space in terms of how we want, what type of private sector growth that is needed, what can be handled, and how can we do policies around them. But again, let me come to the issue of government. Most of the times when we discuss about private sector growth, we just look at theoretical issues, largely on microeconomic dynamics, largely on what international partners says, largely, but we don't come back to simulate, to look at what we want, what can we do, what's our ability, and what type of private sector growth that will give us that will bring individuals up to that level, and that will be able to create the level of competitiveness that we'll be able to handle. Because when you go in, you're talking about, what's it that you have said about local content? I've seen a lot of policies on local content where we attempt largely to protect infant industries, which is good. We have to protect infant industry. We have to ensure that we buy from ourselves. And if you introduce a local content policy where we have to buy from ourselves, then you have to be ready for the private sector to be efficient enough to be able to compete at that level, wherein we're able to equate ourselves in terms of quality output. Now, if you don't do that, what happens is, in the short run, when you imperil imports, it means you taxing imports in a way that should discourage imports in the long run. In the short run, what happens? It affects your current accounts, the general government current accounts. And when that's affected, what happens to foreign exchange? You see a volatile foreign exchange in the economy that we might not be able to handle, that is driven by the fact that we're not able to export enough, and at the same time we're not bringing enough goods to trade, and at the same time, while we're trying to protect the same foreign exchange, there's a demand problem within foreign exchange in the economy. So there are a whole lot of issues. So that's why, for me, what is required, we need to have, I'm not seeing much of that, wherein we have a space where private sector and public sector economics meet and have serious conversations that are not put together by World Bank or IMF. We need a national economic dialogue forum or a commission that brings together information, data, and private and public sector, key private and public sector actors that are able to speak to the issues and understand them, and are able to come with evidence-based information for us to be able to make decisions. Because most of the information that are coming out are not evidence-based information. They're just hypothetical, based on what I thought might happen to change, might change what trajectory.
Quickly before you make a comment, Doc, SM is truly the backbone of the economy, or is just that is a political rhetoric?
So interestingly, so many people have spoken about SMEs, and then we think that if we improve SMEs, the fundamental argument for the improvement of SME is that people will be able to access jobs and create employment in the economy. So when employment is, if you have more people doing business, and then more people are employed. But again, come to see SMEs. Most of the people that go to SMEs, train on SMEs, go out there, do the same business, are not able to compete, and then when they go out there, access capital, they are not able to pay back the capital, and then this is what probably drives the enterprise mortality. How many SMEs have we registered in Sierra Leone, and how many of them have survived? And then when I spoke about the issue of international competitiveness and economy of scale, if an SME comes here, I'm doing to tailoring, and then you having the goods out of Sierra Leone that is cheaper than what the cost of the SME's production, who will buy the SME's product? And then when you want to protect the SME via taxation, what happens to fiscal policy? So there's a whole circle of economic dynamics that affects this conversation in a way that will come here after 10 years. If these dynamics are not discussed properly and handled properly, we'll be having the same discussion just as how we had it 10 years ago sometime.
On the point he was making in terms of bringing the public sector and private sector together. So a good development actually that we will see will help starting in 2026 is that middle of this year, around July, August this year, the Ministry of Finance as the lead government agency with the Ministry of Trade, the National Revenue Authority and National Investments Board signed a memorandum of understanding with the private sector led by the Chamber of Commerce and also the other business member organizations. And the idea there is that anytime the government wants to implement a policy that will impact the private sector, whether it's a finance act or an investment policy or a trade policy, they will have a conversation with the private sector through public-private dialogues. And if that works in terms of what is in the MOU, that will be a good thing, because what that will bring, it will bring first of all, so at the end of the day, people in the private sector will not be the ones, for example, that will direct government policy. But on the other hand, they're able to give that feedback to the private sector to be able to say, to the public sector, to government, to be able to say, this policy will not work or this policy will work. On the other hand, when he spoke about research there, it means that if you want to change anything, whether you want to bring an industrial policy or you want to bring a tax policy, what the private sector will do in that instance, working with government, is to be able to work out the scenarios, to say that this industrial policy will have this particular effect, this tax policy will have this particular effect, and I think that will be good. And in that MOU, the idea there is that anytime these policies are brought aboard, meetings are held regularly, conversations are held, and eventually research will be done to be able to inform policy.
You know, let's discuss two things.
Yeah.
One, we're going to discuss World Bank's recent report that Sierra Leone should be providing about 75,000 jobs yearly.
Sierra Leone what?
Sierra Leone should be providing about 75,000 jobs yearly. We're going to ask about the feasibility of that, whether it's even possible, and who is going to provide these jobs when even the private sector is heavily constrained at the moment. And we're also going to prognosticate the future of Africa and business. But let's start with the 75,000 jobs. You think it's even possible? And who's going to provide that when even the private sector is heavily constrained?
It has to be the private sector, because obviously you don't want the government recruiting 25,000 people, because that has many effects in terms of bloating the budgets, which is also a challenge in the sense that when you spend more money, it means that you need more revenue. And if you're not getting funds from elsewhere, it means that you have to increase taxation, which is a big challenge, as we have discussed earlier on. The private sector has to produce these jobs. I will not be able to know whether that is possible in terms of, because that has to, you need to do a lot of research and more probing into that. But I do think that all the conversations we've had here in terms of, first of all, government supporting private sector with policies that will improve private sector. Private sector players need to be more innovative. Private sector players need to improve their governance to be able to do that. Different players, whether the educational sector, whether the banking sector, the financial services sector, have to be able to help the private sector. So it means that it's tweaking things in terms of what we're doing in the past and having a new way. But if you want to have that new way, it means, going back to what I said earlier on, you need to be very strategic about how you're doing it, right? You can't do everything. So for example, we can't, just like how we talk about our development in Sierra Leone, you can't solve all the problems at once, but you need to be able to build, take those steps, like building blocks or foundations to be able to reach your destination.
Prof, let me hear your thoughts about this before we proceed. These jobs.
75,000 jobs every year. So in 5 years, 75 times 5. That's an interesting trajectory, and I wish we can realize it as a country to help a whole lot of young people. And then, so this is, if World Bank is saying that, I'm sure World Bank would have thought of something that's possible. You know, you said something which is very important about scenarios. You know, you have to understand in which context or scenarios can this particular policy be applied, and what can constrain it, and how can that constraint be managed in terms of risk or otherwise.
Yeah.
And then, so what's the World Bank document that informs this trajectory? Because they cannot just say that when you look at the scale of the economy and then our growth over time. Then so if that is given to government, so that's, I don't know who the government has its policy, private sector policy advisors within the Ministry of Trade. And it's true when you said about, spoke about the Ministry of Trade, because I attended one conference of late where we had an opportunity to discuss with lots of other private sector stakeholders. The only thing I've not seen the commentary on that, so that we can also study it as practitioners and see where and what were the conversations. But if World Bank give us, the government comes and says 75, where can we make 75,000 jobs?
That's
Which sectors? Most of the time, 60% of our economy is on agricultural sector. Where in agricultural sector can we make 65,000 jobs? Again, another thing that we can say here is how much money has gone into agricultural development from World Bank, IMF, ADB, in Sierra Leone for the past 10, 15, 20 years. How much? Have we gotten the level of growth within the agricultural sector? What has affected the agricultural sector? And then if we are able to solve all that, then we can say, yes, agricultural sector can contribute to this level of jobs. I can give you an instance. Assuming Sierra Leone is able to produce, produce in terms of agriculture the amount of rice we consume. If rice alone, how much we pay to import rice, if we can able to domestically produce rice, we'll be able to reduce the amount of imports on rice. We're able to, when you reduce the amount of imports on rice, then what happens? You give a lot of slack on foreign exchange. That demand for foreign exchange that is going for rice importation alone will reduce, and then employment for young people will improve. And then how do we improve the agricultural sector? I've seen lots of effort by governments. I've seen lots of people making lots of thrive on government, but what's the yield? And how that's that? Have we, in terms of rice consumption, have we reduced imports on rice? As rice, so I'm just looking at, I don't know the data. I don't know if you have the data. In terms of how much rice are we consuming and how much are we importing over time? We look at the trajectory and say, okay, a lot has gone into rice consumption, but agriculture can absorb a lot of people. But again, there's an argument that we are losing the young people to the agriculture field. We're losing in the agriculture field to other things like Okada and etc. etc. So agriculture can be one. Fishery, well, I don't know if that's part of agriculture.
So I had a conversation. I was in part of a conversation with the executive director of the World Bank for our region last week, and I remember in my head now, getting old, that one sector was the agricultural sector, the other sector was manufacturing, the other sector was looking at value addition, which is also an agricultural sector. Tourism also is another sector. And what the World Bank is trying to do, so in that meeting there were businesses in that meeting that the World Bank have benefited from World Bank funding, and we're talking about $15-20 million investments. So for example, you see the flour mill, you're seeing some other manufacturing in agricultural space being done there. And what the World Bank was saying, I'm not too sure whether it was related to this, but I believe it was directly related to this. Because when they write these reports, what they actually do is that they do say that if we want to reach a particular level, let's say middle income status in some number of years, we need to have this particular growth in GDP over time. We need to have this number of jobs over time. You know those things, right?
So basically, they were not like figures that say these are things that you have to realize, but these are things we should realize.
Possibly. But what they're also, in terms of just looking at their plans for the region, is that they will have these this amount of capital to be invested in these different sectors to be able to develop them, right? So, and I do see these sectors as critical. And it also means that yes, you have many small businesses that will not, for example, able to access these large amounts of money. But we should also be able to understand that when, for example, a big manufacturing company or a big agricultural company is able to grow their business, it also has trickling down effect. Because the people that supply them, whether it's a transporter or people that supply them some goods in the country, or they say employment, it has a trickle down effect. If you're selling pesticides, for example, to a manufacturing company, they will have that. If they have a camp and you do have catering services, those are the things that trickle down. So in that ecosystem, if you are able to help these big businesses, it trickles down. And what it means is that these small businesses, if they're also to be able to organize themselves better, obviously with good policies and a good business and environment, they will also grow over time.
So let me just give you an example. There was a time when I spoke with somebody. So take, for example, if the concentration is agriculture, there are lots of things that we can do in agriculture if we are ready. And then I had a conversation with somebody that was talking about World Bank funding and everything. And then I was talking about my students, for example, say students in the public sector. One of their micro-credentials will be, though I'm doing a public sector degree, but I also can go out there and do fish farming. They're assuming we have fish farming at that scale, where 1,000 or 2,000 students. When we say direct employment, 75,000 might not just be direct employment. It might be indirect. Probably 10, 15,000 can be directly employed. That also provides job for other 15, 20,000. That's indirect employment. So if 1,000 people go into fish farming in Sierra Leone, then there are also value addition to fish farming. Then what happens is, like, you have lots of people that are absorbed into fish farming, and you see how we're able to produce the fish that we're consuming at that scale. And then take other components, because agriculture itself is very broad. So take what's in agriculture at this particular point in time we want to handle and how we want to expand them. Then we go to financial services or even digital skills, and that's another conversation. I'm seeing lots of people talking about digital skills, in artificial intelligence. If I had a conversation with somebody who we're talking about ChatGPT, for example. You say, oh, you don't need to do things these days, just go to ChatGPT. Forgetting that everything in ChatGPT is also the information that we input.
Exactly.
So if you are not able to inform ChatGPT what obtains, they gives you what somebody from China or America inputs for you. Context, so we also have to create the content. So I had a conversation with ICT students. I went to the class and I said, these are brilliant guys. They do beautiful designs. They can use ICT infrastructure, but the question I ask them is, how many of you that are seated here know how these things were configured in terms of the algorithm that went into the development of this even AI? So what happens is, if we are not even careful, the skills that we acquire are secondary to the developments that are given to us by other people. So there's a lot that we can do in terms of developing the 75,000. And what we can do again, what we have done, what we're doing next year, because also I have to also defend my academia a little bit, because Marina started saying. So what we're doing next year at IPAM, Makibubet, we're doing 2 conferences. We're starting 2 conferences next year. We're launching it in January. One is we're doing an international economics business, international business, economics, finance, and policy research conference. Let me tell you the advantage. Most of the times I go to conferences, people talk, but you will not say, okay, let us present a research in this area that will inform this discussion. If you go to international conferences, every discussion is informed by the latest research, because it tells you exactly what's happening and it gives you the figures. And when you have the figures, the data, they helps you to make decisions. Now, if we have that business conference in Sierra Leone, you have private sector people, you have public sector people, you have academia all coming together in one room and then discuss very important research. In 2024-25, we produced about 125 research at IPAM that are referenced internationally. Very good one on taxation. If you look at, we'll give you the tax trajectory and how it's affecting private consumption using real-time data and a real-time economic model that are used by Harvard, Oxford, and those are the people that are doing the things. Those are the people that informs global growth. Those are the people that informs the financial system in America. When Trump was saying increase interest rates, the man did not increase interest rates because he was playing with the research information that was coming from the Central Bank of America. And then if we don't do that, then that's a problem. So that's one of our intervention. Another one that we want to do, that...
We know we're running out of time, but I would love to have your bite on the 2026 budget, which actually focus on President's Bill's directive, which says pro-people budgets. Let's have your bite on it quickly. As we're about to wrap up.
So briefly, there is a lot of more of things that we'll have to look at in the budget in terms of how we read, how we study the budget. But one thing that I've seen in the budget is like, this budget has to be financed domestically. So we're shifting from international funding to domestic funding. And then that brings us to the issue of the pressure has to be in the private sector to be able to finance this budget. And then if the private sector has to finance the budget, then the mechanism has to be there for also government to protect the private sector. Because I agree with government that we have to streamline taxation in a way where we'll be able to increase the tax base.
Do we have the mechanism?
Well, he can. I am sure lots has been done in terms of policy. I'm reading every day as to what has to be done or what is needed to be done. But seriously, if there are loopholes within the tax system, we have to address them. I think we've had this conversation. In fact, there was a time when we had a heated conversation on it when he was so serious about the issue of improving taxes inside. I think that's becoming very clear now, because if we're not getting money from international donors, now international finance is being concentrated more on defense and other issues. And then if we're not getting that money has to come from within. But if the money has to come from within and you have a private sector that is very weak, what happens? Even the budget that is penetrating the private sector and try to capacitate the private sector to be able to drive in revenue will also in the long run affect the private sector, because 30.4 trillion is what we want to get, and 22 trillion of that should come from private sector and grant. And then there's a deficit of 4 million which will come by from international funders and negotiated. So just quite a whole lot of tax. And that burden is on tax policy and tax administration. So we want to see how they're playing out on it.
Let me hold you there briefly. We had shot some vox pops from, I think it was yesterday, they shot them actually. Our business reporter had gone to the streets of Freetown to sound the views of people about what we're discussing this morning. So let's just see these vox pop. We'll be back shortly.
Good morning, Victor, and good morning, Marina. Good morning to all Sierra Leoneans. Today we're in Akuta Road Market, one of the busiest markets there, na Freetown. For Ask Business people there, what do they think about the current economic status of the country? Well, a few months back, the Minister of Finance within our wake-up breakfast show, and it talks say salon don't reduce to a single digit, and he also mentioned say the currency better past country there, with neighboring country there like Guinea and Liberia. So today within Akuta Road Market, for talk to market people there, what do they really think about the economic status of the country, and if how them they buy earlier this year or last year, now the same to waiting that they buy today. Make we hear it from them. Good morning, ma. What's your name? You can tell me what you think about the economic status of the country, like how they go and buy from earlier this year till up to this December 2025.
Well, if you still talk, you know go down because Irish potato when we buy reasonable price now, Irish potato now 1,200,000. So if my price then they go up, so how we know they sell? Where till they able to survive from them till the Yabas now I don't go so to saving something. So but if the government can intervene, they don't so they cry to proper government, so they assist people at the price. Only assist people at the price. From where oil goes 750 up till now, they not put some down. Up till now, still with this kind of struggle here soon. Where you go back, say they pull that money there. Nothing we gain from that. So we the only big the big papa government. At this price business here. Let them bring up for with the price them down. rice there, oil there, yabas there, the thing and there na song. Where you go buy now, you can't put some for let you see money now, no problem. I don't know the bed to Papa government, let help me. But this price more, this price business there, let Papa government help me. Yeah, and that's what I'm saying.
So one thing where they talk about now rest. The main thing is rest. Rest don't go down, not true.
Well, for we rest not go down because now rising and fall. Where you go today, the meat are so price. Where you go tomorrow, the price don't go up. So now rising and fall. And I'm not able to put some on it up till now.
Thank you. So we go ahead and interview another person. We go tell we what did they think about the status na the country. Good morning, ma. What's your name?
Maminera Matu Bangura.
Mrs. Bangura, you can tell we what they sell?
They sell from the market. From the market, they sell. First, you see no one out. Card. Petete bag because we go buy we all 2 million, 3 million. And now one thing no more you buy. Money done. So now pass one for packing out for let customer go see table fine. Would they put them bag, put card. Petete I buy 700 then this year. See they now 1,100,000 Nasa go buy petete. How for trading now? How for day na this country? Now me I don't understand. Because what in do trade petete they buy 200, would they buy 120, would they buy 150. Now they buy petete 1 million. How for trading? I go sell, let you survive for you begin they get for pay school. You get for eat, you get for pay us rent. Then you go buy season almost. Then you can sell 3 million, they get 1 trillion. How long you go get that for go pay us rent 5 million, 4 million, 2 million? Enough funny for you. Pepper, they buy 10 cup, that off what so you can 8 cup, 7 cup. Then you don't go buy 8 leon, you don't go buy 9 leon, you can sell 10 leon. How for survive in this country, me I don't understand. But God in grace, now get for make solution for we don't understand.
What's your message to the government concerning the price?
Well, they beg Papa government, let's see to we. Let's see to we the woman there because the sufferness is too much for we. Where you go now, poda, something and one great man you go meet today. One great man just for let you go back to normal. That one you different na dot cut. Let you go get a normal. When you come back again, you can't pin sell no day. Sometimes when you buy jacket, so you buy this. When you don't buy 4 for 5, you can't sell 3 for 5. Before then they say 2-3 days you don't read. Money penny they come out. I will go. I will beg Papa government. They can help we because if the transportation don't be okay. About the bad say, thing them go the cheap. But if the transportation in Bona, what they say can so they can fire we. Enough funny for we. We are with the beg with the woman. Would they appeal to you, Papa government? Let una help we, let una see to we. Now we na woman, now we na Papa today, now we na Mama na us. Enough funny woman they no get work. Woman they no get work. Picking they no get work. Me like me begin don't guide it. Look and see down na us. And they do nothing work no day. So they happy. So this age here, I'm not able to go so again, I'm able to cancel again. Once I cancel, don't pay empty for the market table. I get what they eat with me picking because when you don't so for them, this gets a most sweet ram. I make a hidden house.
Thank you. So these are some of the views them from the market woman then Kuto Road. We get in the studio right now, Dr. Lako and also Mr. Alfred Akibobet, where they talk about the economic status of the country. And if we can Akuta Road and hear this, but the economic status and how people that they go by, and they make with the ask, if waiting that they talk, really they reflect in the market. Good day, ma. How you do, ma? Want for disturb you small. When they go further for ask people about the economic status basically at the country. Good morning, ma. One bug is small. We basically want for ask about what do you think about the prices at the country from December, what they right now so. From January up to December, I assess the price. You think the price they don't go down, price they don't come up? How business they generally for una business people then?
Well, me they talk, me na career to Kamara from Kuto Road Market. Man, the things is rough because so they go buy the price. Think here so the big Papa government so they reduce some prices then. Right now market's not there. Sales they go through. So we dey beg Papa government for let they reduce some price. Price then there today we dey go, we meet high, tomorrow go meet low. Why that's what they happen? So we dey cry to Papa government for help.
Thank you, ma. Yes, ma, you go on for add your voice onto this. Thank you, ma. So we go further into the market and we can see the different things then they where people let it sell. Good day, ma. What's in your name?
Me and I made them put me in that TV.
Okay. Now we go further for ask the ordinary citizens, members of the public, basically waiting and think about the prices of different things there at the markets. Good morning. Good morning. Good morning. So basically we ask about the economic status of the country, the price of different things there, because government people then say the price don't reduce to a single digit, one if not two for one to go buy from the start of the year compared to now.
Junior. Oh, my sister. Yeah, I'm not going to talk much. Because I don't say what they talk, let's improvement. So me, I'm only talk that. I'm not going to. Don't say what they talk, nothing. You can say the plan.
The frustration amongst market women, they're very clear and very evident of the economic status of the country, and most of them say they don't say whether they talk and voice out their concerns, but nothing not be done about that, and some of them don't really be frustrated and no one talk anything again, and some of them maybe out of fear, shyness, or another personal reason. So these are not just few perceptions. Good day, how they do? 1 minute. You can come buy in a market, eh? You can come in a market, you can come buy. How you think about the prices of things in a market?
Well, I think about the Yabas, them right now. The Yabas, right now, it's don't better. The rest, it's don't better. But the fish no more, you have to like pepper, don't dear right now. So, the only thing that is already above. It was a good bad year. But right now, the Yabas, the rest, they all they have less price.
So we can see mixed views and mixed reactions. While some will complain, some then will say it better pass yesterday. And these are just few views from Kuto Road Market where the people there don't give. Good day, ma. How you do, ma? I want for a buggy small. And for arts. Okay. You can tell me about how business they go, right? Now they go buy, and they make with the ask. If what that they talk really they reflect in the market. Good day, ma. How you do, ma? Want for disturb you small. When they go further for ask people about the economic status basically at the country. Good morning, ma. One buggy small. We basically want for ask about what do you think about the prices at the country from December, what they right now so. From January up to December, I they assess the price. You think the price they don't go down, price they don't come up? How business they generally for una business people them?
Well, me really talk, me na career to Kamara from Kuto Road Market. Man, the things is rough because so they go buy the price in here, so they beg Papa government so they reduce some prices then. Price now market's not there. Sales they go through. So we they beg Papa government so they reduce some price. Price then there today we they go, we meet high, tomorrow go meet low. Why that's what it happen? So we they cry to Papa government for help.
And thanks indeed to Tommy. Prof, just a minute perhaps, we are closing off. One thing that was quite, evident there, the bottom line was that things are expensive in the market, and not least the staple food rise, and the economy is screaming at the top of its voice. How would we fix this? Just 1 minute, Prof, and then we can hear from
how do we fix the economy when prices are increasing?
Expensive.
So first of all, we have to develop a domestic market that is able to cater for the type of economic growth that is needed. I will bring the private sector actors together and try to provide them with the requisite capacity, not only finance, governance, and otherwise, to be able to put them at that level where they will be able to leverage on international competitiveness.
Okay.
And then they'll be able to harness some of the things domestically. For example, if rice is produced domestically at a scale, you reduce the transactions cost. And when the transaction cost is reduced, then the purchase price of rice will reduce. But we continue to buy rice internationally. And then, so my simple example, if you take a dish, a traditional, well, say a normal dish in Sierra Leone, 80% of what you eat is imported. And then when you're importing, you're spending more. And when you're spending more to import, then the cost of that will be expensive. And when it's expensive, no matter what happens in the economy, people will still begin to complain. So that's just one thing that's short, but it's still, there are still other things that can be done probably in another conversation.
Indeed.
We might be able to look at them. So that's what I will do.
Okay.
First of all, I know my people will not be happy with me, but just scrap the import duty on rice, right? Import duty on rice was brought back. It was 5% last year, I think now it's 10%. We don't produce enough rice. Let's just forget about that for now. And that will bring the rice, the price of rice down. But we also don't only eat rice. We don't eat dry rice no more. We also look at other things on the plate. What are we doing to ensure that plasas is not that expensive? What are we doing to ensure that onions is not that expensive? Pepper and all these things. So you need to be able to improve the supply chains there. You need to be able to help farmers. So you need to look at the basket of goods and say, a plate and say, you know what, let's target these things, right? They're high-level things. Like when you look at many times when even the conversations we're having here, most of the conversations are high-level in terms of say, okay, well, let's help private sector to do this big business, etc. But when you look at what people actually eat and the staple food, whether it's the bread for their children to go to school, whether it's the butter to put in the bread, the mayonnaise, and the plasas and the stew, etc. Let's target the things in there and say, let's government directly support these things, subsidize these things if it's possible. And that will be better, because when you subsidize, not saying that we should stop our subsidy on, let's say, fuel and things like that, but when you subsidize some of these high-level things, you're helping people that can maybe earn it more. But when you subsidize things that people that are vulnerable and people that earn less income actually more and more use, then you're basically targeting something that will directly help them. But the main one is just remove the import duty on rice for now, and we can sort it out later on when we're able to produce enough rice, then you can put the import duty back.
It's the bottom line. Thank you very much indeed, Alfred Akibu-Betts and Professor Droman Delako. We truly appreciate indeed the time you've spent with us this morning. Wish we had more time to discuss these. These are issues are many actually on the economy. I wanted also to talk about the single currency that ECOWAS is currently piloting to have across Africa, which is something perhaps we would slate for another discussion in the future.